What if I told you silver could crash by 40 or even 60% right before it explodes to $500 an ounce? That sounds insane, but history shows this happens right before every massive commodities supercycle, and almost nobody on YouTube is talking about the real reason behind it. Most investors think silver will just keep going up because of inflation, AI, electric vehicles, and solar demand, but the market doesn't work like that. There's a hidden force that could trigger a brutal crash first, wiping out millions of retail investors and creating the biggest buying opportunity of the decade. Right now, silver is one of the most hyped assets in the financial world. Analysts are calling for $100, $200, even $500 silver. Demand from green energy, AI data centers, and electronics is exploding, while mining supply is struggling to keep up. On the surface, it looks like the perfect storm for a massive bull run. But here's what nobody is talking about. Silver is not just controlled by physical supply and demand, it's controlled by paper markets. Futures contracts, ETFs, and derivatives represent far more silver than actually exists in vaults. Big banks and institutions can short silver using massive leverage, pushing prices down even when real demand is strong. This is how silver crashes happen. And this is where it gets scary. During global market stress, investors sell everything to raise cash. In 2008, silver crashed more than 50% during the financial crisis. In 2020, during the COVID panic, silver collapsed again, right before it exploded to multi-year highs. This pattern is called a liquidity event, and we may be heading toward another one. Interest rates are high, global debt is at record levels, banks are under pressure, and if the stock market crashes, silver could get dragged down with it. But here's the twist. Smart money might want that crash. Big institutions don't buy during hype. They buy during fear. A sharp silver crash would shake out weak hands, trigger stop losses, create terrifying headlines, and allow banks, hedge funds, and wealthy investors to accumulate physical silver cheaply. Then, when demand overwhelms supply, the price can move violently upward. Now add China to the equation. China is increasing precious metals imports, expanding solar manufacturing, and building massive AI infrastructure. Electric vehicles, green energy, and global tech manufacturing all require silver. Unlike gold, silver is not just a store of value. It's an industrial metal. That means if the tech revolution continues, silver demand could skyrocket while supply remains limited. This changes everything. Imagine a world where inflation stays high, governments keep printing money, and investors lose trust in fiat currencies. Gold would rise, crypto would surge, stocks would become unstable, but silver could become the most explosive asset on the planet. We could see $100 silver, then $250, then $500 in a true supercycle. But the road there will not be smooth. First, there could be panic, then accumulation, then a historic breakout. Smart investors understand this cycle. They don't chase hype. They prepare for volatility. Some hold physical silver, some wait for dips, some diversify with gold, stocks, and crypto, but they all know one thing. Crashes create millionaires. So the real question is not whether silver will crash or explode. The real question is, when silver crashes, will you panic like the crowd, or will you recognize it as the buying opportunity of a lifetime?